All right. Aaron wants to look at Salesforce, the global giant in CRM. Do we call it that? Sales management software.
CRM, yeah.
Yeah, CRM.
Customer relationship management, isn't it?
Yeah, for
I
sure.
think I,
Interesting year. The company's been down year to date. So, and I'm not sure if you're touching on it, but there has been some thought that AI is really going to hurt some of their platform, but they can also benefit from it. So,
yeah. So I mean, they're heavy into the AI. We're going to talk
yeah,
about that. And then at the end, we're going to talk about some of the AI exhaustion as well. But anyways, why don't we start at the beginning here?
yeah,
Just the discussion of the company. So Salesforce is the topic of my segment. CRM is the symbol. World's largest AI CRM platform. So customer relationship management. They provide cloud-based software solutions to companies all over the world. They're one of the biggest SaaS companies, software as a service companies in the world, and they've gone heavily into the AI investments with their data cloud and Agentforce offerings. So they trade at a price right now of about $245, 956 million shares outstanding, and a $233 billion market cap company. So one of the large caps or mega caps even. So the company's stock price has experienced fairly significant volatility over the past 12 months. It's not been a great performer in the market. So it peaked 52-week high back in December of last year. It's down right now about 27% year to date, down about 7% over the last 12 months. So let's take a look at the company's quarterly financial results, the fiscal Q1 2026 results for the period ended April 30th. Revenue was up 8%. Subscription and support revenue also up about 8%. Some expansion in operating margin, both on a GAAP and a non-GAAP. A 4% increase in operating cash flow and free cash flow. And then non-GAAP EPS up by about 5.7%. So these are fairly positive numbers across the board, but earnings per share not keeping up with revenue growth is not a great sign, especially as margins are increasing. So we'd actually like to see some leverage on those earnings as well, and seeing earnings grow at a faster rate than the revenue line. In terms of segment performance, the company generated growth across all of its segments. We can see here platform and other make up about 45% of the business. Revenue is up 8% in the quarter. There's also their marketing and commerce cloud business up 9%, service cloud up 10%, and then sales cloud up 7%. So just looking at the company, the company's outlook, they did provide guidance for the full year. They're looking about 8 to 9% revenue growth for the year, so roughly in line with what they did in the first quarter. And they're looking at operating cash flow growth in the range of about 10 to 11%. So strategic priorities are to continue to integrate AI into their services. The main service offering that they have in AI is their Agentforce. This is an AI agent that is customizable for their enterprise clients. So that has really been the main focus. Now, industry trends, we're still continuing to see growth in the industry overall, but there are concerns regarding macroeconomic uncertainties and just slower spending. There's also concerns over the company's AI business as well. So AI has certainly been an avenue of growth for them and other companies as well, but it's also increased the number of competitors in the space. And in many cases, analysts and investors are wondering, can they maintain their competitive moat given how AI is transforming software and SaaS? Now, really interesting example is there's something called vibe coding. And vibe coding is essentially where you use AI to create software applications without having to code. You just use natural language. You instruct like you would ChatGPT. You can make a fully functional application. Now, there was somebody who put out a viral post. Don't know if it was on LinkedIn or Facebook, but specifically, this was the business owner that said that they vibe coded their own Salesforce replacement, got rid of their Salesforce subscription, and now just use their own coded platform. So whether or not this is true or not, or the details is unknown, But this is essentially one of the things that investors are looking at right now. One, slowing growth, and two, does AI actually eat into the competitive advantage? Balance sheet, nothing bad to say about the balance sheet. The company has a decent net cash position. So in terms of just being well situated on a solid financial foundation, they're looking good there. Valuation wise, if we look at the trailing valuation based on just reported GAAP earnings, so non-adjusted earnings, about 38 times. If we look at analyst estimates, looking at the current year, it's trading at about 21 times earnings. So this is an improvement in terms of the attractiveness of the company's valuation, but it also comes at the cost of some of those uncertainties that I was referencing. So just in terms of our take, the valuation certainly a lot more attractive than we have seen it over, say, the last 5+ years. They're doing acquisitions. They did a fairly significant one of Informatica, positioning it for future growth, also allowing it to leverage its strong financial position. Really going heavy into the AI business and agent as a service offerings. Now, again, though, AI, it's a double-edged sword for them. On one sense, it's an opportunity, but in the other sense, it's a major cash sink in terms of what they have to invest. It's a highly competitive market, and it's really potentially opening the door for many of their competitors. So we're just on the sidelines right now watching, but certainly from a fundamental basis, it's interesting and it's worth future consideration.
Yeah, I agree. I'd be on the sidelines right now, but I mean, it is a company that we'd look at. I mean, it has a long-term track record of growth in many different environments. They've been able to navigate different challenges against the business. And if on a forward looking, like these are adjusted numbers, but you're looking at, 21 times this year's earnings. I mean, that is for this company, that is getting to the on the historically low end for sure of its valuation. But like Aaron said, the threats out there are more significant probably than they've been, in the past 2, 3, 5 years. So, you'd want to watch that evolving environment to see if there is a threat to growth going forward. And if there is, then you have a new valuation metric. Probably you're not going to get a premium multiple. So I'm not sure if everybody's going to be able to vibe code their CRM. There's a lot that
And the
goes
thing
into
is,
that, but
I
I
don't
mean,
even know
yeah,
if that's true. Maybe he
there's
vibe
that
coded,
too.
maybe he vibe coded nothing. Another thing is maybe you can vibe code the CRM, but you still have to host it somewhere. You still have to maintain it.
You have to pay for the
It's
yeah,
easier
yeah,
to pay a fee to a SaaS provider that does it for you, even if you can do it yourself,
yeah.
right? It's there's that whole argument. So but that is a story that I heard, and it specifically involved Salesforce.
Interesting.